Hi, good morning to you all, and it's great to be on the show. Look, the answer to your question is very, very sensitive. We all remember, like you said, how the taper tantrum ended up. Right now, we are in a bit of a perfect storm in that we need to taper. We have a lot of fiscal stimulus programs out there post-pandemic that needs to come to a stop. And obviously, central banks are debating, can we, and if we can, when can we raise interest rates on the back of rising inflation? All of which ends up basically investors having to reprice their risk, reprice their assets, and therefore the EM assets are likely to be significantly repriced. Now, the one difference this time, I think, given the liquidity in the market right now, is that there will still be an element of hunt for yield, but investors will have to differentiate in terms of where they place that money within the EM. And I think this time around, given the context of the looming and growing geopolitical battle between China and the US, this time when placing money in EM countries, it won't be a broad brush stroke, but they will have to also price in the geostrategic implications of which country they're investing in.
Interesting. So on that basis, let's just go a little bit further down that thought path. Which regions, which countries are most vulnerable then, taking into account the U.S. China dynamic as you just outlined?
Well, frankly, I think, I think the region that is most vulnerable, frankly, not even EM, but it's Europe, but that's for a different matter, because obviously China is no longer just a cheap production country, it's a heavy consumption country. And whilst US can fight China effectively, Europe will find it more difficult to do so. Now, in terms of EM, obviously I'm looking at Asia. There's going to be a lot more pressure, geopolitical pressure on especially East Asian countries in being able to, or being forced rather, to choose a side between a US-led alliance or a China-led kind of world order. That's the immediate impact. And by the way, there will be some prospective positives for certain EM countries. Now, Turkey could be one of those countries if it plays its cards right, because a lot of the Western manufacturers will be looking to hedge their supply chain risks, their production risks out of China. Now, even if they want to, they can't really take away and reallocate more than 12 to 15% of their global production numbers. But one country that can benefit is a country such as Turkey, which is logistically really well placed and has quite a potent manufacturing ecosystem. But suffice it to say, I think the difficulties there will be in respective countries within EM and out in being able to pick sides. And I think that will be one that will potentially lead us into a world where the traditional alliances may not necessarily hold as steadfast as they did before.